With gold below $1,700 and silver below $20, what is the next move? Well, Chuck Norris is down to one chess piece, but he's ready to beat his opponent. Chuckmate. In this video, I'm going to go over a calendar of events that could move all the major markets, stock market, bond markets, and precious metal markets. I've also polled my audience on what they'd like to do next with today's prices. Buy more gold, buy more silver, or save cash and wait and see what happens. So if you stay to the end of the video, I will share the results of that survey and also share with you what I'm doing next. After this brief word. Today's video is brought to you by gratitude. First, I'm thankful to APMEX for trusting me as a partner and creating a special Silver Heist affiliate link in landing page. And I'm thankful and appreciate my audience who have followed that link, browsed, and even purchased. So like Eli, thank you Eli, and thank you to all the other buyers. It does not cost my audience more to go through my Silver Heist door instead of going to APMEX directly, so thank you all. So 3 big dates in the next month. One is Thursday, October 13th. That is the release of the next CPI inflation measurement for September 2022. Then there's the U.S. midterm elections on Tuesday, November 8th. And then, or actually in between, there's the next Fed meeting and rate decision on Wednesday, November 2nd. So I'm actually kind of surprised that the Fed meeting is before the election. So what impact are these 3 events going to have on inflation, retirees' income, workers, and the markets in general? The next inflation numbers are going to be important because these numbers work their way into a formula which impacts savers, retirees, workers, as well as U.S. government borrowing costs. So the U.S. Treasury has a program for retail savers called the I-bonds, and that is based off of the most recent 6 months of inflation. And so that is adjusted on November 1st. And so this next one is going to be the 6th and final month to decide whether the present 9.62% annual interest rate paid to savers goes up or goes down. So there's going to be a small window of time between October 13th and November 1st where people can decide whether they want to quickly get an I-bond at the present rate or just wait until November 1st or beyond to buy their next I-bond or their first I-bond. So that is an example of the inflation number, which isn't perfect, having a direct impact on the rate of interest paid to savers, but also the cost to the government for financing some of their debt. This next inflation number is going to be used for Social Security cost of living adjustment. The New York Times anticipates this is going to be the largest cost of living adjustment in 40 years, and they anticipate it to be around 8.7%. So inflation has not been transitory, it has been persistent, and it's now moving its way into formulas and changing the rate of return for savers, but also changing what retirees are receiving for Social Security, and maybe what federal workers, their contracts of cost of living may be adjusted by this number. So while I certainly like to see retirees get some kind of adjustment to try and keep up with inflation, and workers getting a raise so that they can keep up with inflation. But can the federal government afford these increases, and are these increases themselves inflationary? So whether it's I-bond rates or cost of living adjustments, inflation just becomes a if this, then that. But for the Fed and for the markets, it's really more about perception. So if the Fed or the markets are expecting a certain level of inflation and it comes in higher or lower, they may change what they feel they need to do to attack inflation. And then the markets are trying to figure out if the Fed is actually trying to stop inflation at all costs, or whether they're willing to pivot at the signs of any recession or stock market downturn. So the inflation numbers that are going to be released on Thursday, October 13th are crucial in determining the direction of interest rates and markets. But what about gold and silver markets? Well, I think the gold and silver markets are just on a delayed reaction. In some ways, the stock market is still expecting to get what they want. It's only after they realize that the Fed is losing the fight against inflation, or that the stock market is losing their fight to get what they want, that people will leave the stock market and look for the safe haven asset of gold and silver. So it's just a matter of when. It's a timing matter, is when are the stock markets going to realize that the world does not revolve around their values. So what does my audience want to do with gold and silver prices where they are? They would most want to 300 votes, 35% buy more gold, 24% buy more silver, 41% save more cash, and wait and see what happens. So the biggest group of people are in the wait and see what happens range. And there's nothing wrong with that. Waiting and seeing what happens covers a lot of things, and there's a lot of uncertainty, and there is no rush to buy either gold or silver. So gold and silver is about personal responsibility, so it's totally up to individual households to figure out their priorities. And what am I doing? Well, I just placed an order for fractional gold. I know gold eagles are high right now, but I'm working towards a fractional gold coin a month and filling this tube of 1/10 gold fractional eagles. The premiums are not good on eagles specifically, but when you're this close to filling the tube, out of force of habit, I'm going to ride this to its conclusion. So this just fits my goals. Your goals may be completely different. It's totally up to you. So let us know in the comments below what you want to do with gold and silver at these prices. Please give this video a thumbs up. Thanks for watching.